All I kept hearing for the last pretty much months is that we're going to wait for the Fed rate cut. The rates are going to come down once the Fed cuts the rate. Well, newsflash, the Fed's cut the rate 25 basis points. Did we see a 25 basis point reduction in mortgages? No, and hell no. And why? Because that's not how that works. But the fear porn and the maleducated media continue spreading the misinformation about the interest rates being Fed rate dependent. It is not a one-to-one relationship. As a matter of fact, if you look at the bond chart, here's what happened. As soon as the rates were cut, yeah, we saw a brief, very brief improvement in the mortgage bonds, which is what the mortgage rates are based on. But as Fed Chair Powell went out to speak and the financial markets started digesting his comments, the bond market went the opposite direction. And then that's where the mortgage rates started to see a hedge up. So we're basically seeing the same thing that we saw a year ago when the Fed cut the rates by 50 basis points. And on the heels of it, instead of the rates coming down, the rates actually skyrocketed instead. I'm not saying that the rates will skyrocket this time per se, but the stronger economic data is what drives the rates, not the Fed rate cuts. The Fed commentary means a lot more than the actual rate cut by the Fed. So bottom line is, if you were waiting for the Fed to cut rates in order to either buy or refinance, you just shot yourself in the foot because the rates actually improved starting with August 22nd, when the Fed announced at the Jackson Hole that they would be cutting rates in September, August 22nd. And literally 2 days ago, we saw the lowest mortgage rates for about a year. And now the rates are sliding back up. So what happens next? We'll see. Another rate cut may be on the table in October. We'll see what that brings and if it will spell more relief for the mortgage industry. But again, follow the professional's advice. Do not follow the news.